Year-end tax planning tips for Canadians. For Canadians looking to waltz into 2024, here are some year-end tax planning tips that might save you some money. We hope these tips help you. 1. Maximize your RRSP contributions. Consider this your financial trump card. Maximizing your registered retirement savings plan, RRSP, contributions before year-end not only builds up your retirement savings but also lowers your taxable income. It's a win-win that lets you strut into the future confidently. Don't forget, you have until the end of February 2024 to make RRSP contributions for the 2023 tax year, so try to contribute as much as you can. 2. Charitable contributions. 'Tis the season of giving, and the tax gods smile upon charitable souls. Make your year-end donations count by contributing to registered charities. Not only are you making a positive impact, but you're also eligible for tax credits that can soften the financial blow come tax time in April. 3. Maximize your TFSA contributions. The tax-free savings account, TFSA, can be a financial wizardry tool. Maximize your TFSA contributions yearly to shelter your investment gains from the clutches of taxation. It's a stealthy move that lets you build wealth without the taxman taking a bite out of it when you need it. 4. Don't forget those small business deductions. If you're a small business owner, it's time for a tax deduction session. Ensure you've maximized all available deductions, from business expenses to eligible capital expenditures. It's your chance to make tax legislation work in your favor and allow you to keep more of your hard-earned cash. And even if you're a salaried employee, you can still benefit from a tax credit if you worked from a home-based office for all or part of the year. Check with your accountant or the CRA for how to calculate that amount for the 2023 year. 5. Review your investment portfolio. Give your investment portfolio a year-end checkup. Consider rebalancing your investments to align with your financial goals and risk tolerance. Be strategic about selling underperforming investments to minimize capital gains taxes. It's a financial makeover that leaves you with a more tax-efficient and optimized portfolio. 6. Explore tax-efficient investing. From dividend-paying stocks to tax-efficient mutual funds, there are ways to maximize returns while minimizing CRA's cut. It's a tactical approach that lets your money work harder for you. 7. Utilize all available tax credits. Canada offers a wealth of tax credits. The trick is knowing which ones apply to you. Whether it's the Canada Child Benefit, the Disability Tax Credit, or the First-Time Home Buyer's Credit, explore and leverage any available credits to maximize your tax savings. 8. Medical expenses. Medical expenses can be a hefty burden, but they also carry the potential for tax relief. Compile all of your eligible medical expense receipts and claim the total amount on your tax return. From prescription medications to medical equipment and even certain medical treatments, every eligible expense helps ease the financial load. 9. Stay informed about tax changes. The tax landscape is ever-changing, and ignorance is not bliss when it comes to your financial well-being. Stay informed about any recent tax changes or updates. This knowledge empowers you to make informed decisions and ensures you're not caught off guard when the tax season curtain rises. Year-end tax planning is not a chore. It's a financial strategy that can improve your life and allow you to realize all of the deductions you can. By strategically navigating RRSP contributions, capital losses, charitable giving, and more, Canadians can waltz into 2024 with a lighter tax burden and a firmer grip on their financial destiny. Did you find this video helpful? If so, please click on like and subscribe so we can continue to create content for you. Thanks. And please visit our website at www.debtdetoxadvisors.com.